All right, we're here at the JD Power Auto Forum. I have the one and only Alan Haig. Alan, thanks for catching up a little bit.
It's fun to be here with you, Paul.
Okay, so a lot of people are thinking and talking about what is happening with dealer valuations with all the tariff talks, a lot of retail uncertainty. Big question is that translating to dealer uncertainty about valuations moving forward?
So far, it has not translated to any kind of decline in values. We signed 4 letters of intent in the last week, and the letters that we signed, the values for those stores were at or above our expectations. We started the process that was well before the tariffs. So I think dealers are looking at this tariffs as some short-term noise that's a little bit confusing, but these dealers have got a long-term perspective. They want these assets not for the next 6 months or the next 2 years, but for the next 20 years. So if the right brand comes up in the right market, they're going forward aggressively.
I think that's really interesting, that more than you expected.
Yeah.
And when you went into like what your, estimate or what you thought it might be worth, was that factoring in a tariff drop or a tariff dip, or was that just standard market and it beat that by 30%?
Yeah, no, we weren't valuing any tariffs into our estimates of dealers before they hired us. So I don't think people were expecting this 25%.
Right. No.
So we were concerned when we went to market what the impact would be. So far, we haven't had a single client or any buyers back up on a deal, meaning they want to get out of the deal or they want to reduce the price. We're having a conversation on one deal that includes an Audi store. But other than that, all the other brands we're representing, people are leaning forward aggressively.
I think that says a lot, actually, about how you all do business. Because probably the just like a real estate agent or something, like what's my home worth, right? The temptation to overestimate it to get you excited about doing business with me. You gave obviously a conservative estimate, and it even surprised you in the midst of that. So I think that says a lot about how you do business.
Yeah, the valuations have been hard since 2019. In 2019, we did some math. We were 99% accurate in terms of estimating a value to our client and what they received at the closing table in terms of blue sky. And then we got off base during the COVID era because the values went up so fast. We couldn't really keep up with the value increasing. Now we're back to more normal times where people are looking at current profits as the best estimate of future profits. So our estimates have gotten more accurate. But what we still don't always have in our minds when we're doing the valuations are the level of confidence on behalf of the buyer. So we'll give you an estimate in January. We may not go to market until March or April or May. So when we get there, that's really what matters, how people are feeling about the future.
At that moment.
Yeah, and I think the dealers looked at the amount of money they made in 24, which was not as much as 23 or 22, but still a fortune, more than double their profits from 2019. So private buyers in particular have a lot of capital. They like the auto retail business. They haven't lost confidence in its future. They want more stores, especially if it's the right brands in the right markets.
Are there any brands that are moving their way to the top in this current market, or is it really a grab bag of what fits for the market and for the potential or for the specific buyer?
I think there's some brands that have been in motion and been strong for a long time, like Toyota, Lexus. They've done a great job navigating the transition of powertrains. They have not put their dealers in a tough spot by trying to force them to sell a lot of unprofitable EVs. The Toyota, Lexus are really the top of the food chain in terms of where every dealer would like to have a Toyota store, Lexus store. In terms of brands that haven't been, the top 5 or 6 brands for a long time, I would say Mazda's been a brand that's come up a lot since the pandemic started. Their sales per dealership have gone up more than any other brand that we track. So that's a little bit of a sleeper, and we're encouraged with the profitability of those stores that we see as well. So, Toyota, Honda, BMW, Mercedes, Lexus, Porsche, all those brands continue to be rock solid. But I would say that Mazda and also Kia has been another brand that dealers have really been seeking to acquire.
So what are you saying, last 30 seconds, what are you saying to a dealer who is maybe considering selling their store? Is it a good time or is it a bad time? What should I do? Should I wait a little more or should I get in right now?
It's still an excellent time to sell. I mean, we get the call once a week, a couple times a week from people saying, hey, I don't own dealerships, but I'd like to have dealerships.
Oh, wow.
Or people that have dealerships saying, I want more dealerships. Or a dealer receives an announcement of a store that we sold someplace and they call us and said, why didn't you approach me on that business? So there's no lack of demand for dealerships. There's some dealership brands that are challenged. Infiniti and Nissan have a particularly tough 24 months.
Couples.
Stellantis has had a tough period, but we're actually seeing the rebound happening there.
Oh, that's encouraging.
So a couple of the letters of intent that we signed are for Stellantis or groups that include Stellantis brands. So I think we'll view that as a smart time now to buy Stellantis. because it's bottomed out and it's on the road to recovery.
Very good. Well, Alan, thanks for giving us a few minutes. And also, I mean, as always, thanks for serving the industry the way you do.
It's our pleasure to be part of it. Thanks, Paul.